An impressive sales number, healthy product, price realizations and volumes, a huge surge in net profit margin and a surging demand due to import substitution has catapulted Bhansali Engineering Polymers Ltd to a good stock to buy into. The company had one of its best quarters due to a rise in demand. It was helped by a shortfall worldwide due to disruption of the global logistics supply chain. The stock is currently trading at 20 times PE for FY23, which means investors may opt to book profit partially. In the past, we have been drawn into BEPL among others due to the leaner management of working capital along with the debt-free status. What makes it our pick for ideas for profit today? Well, ABS market in India is duopolistic one with demand ranging from 2.75 to 3 lakh ton annually. Indian manufacturers caters to about 55% of this demand. The rest is left for domestic ABS manufacturers. Inyolis, sterilization and BEPL, which through import substitution play plugs the gap. BEPL has a domestic market share of 26%. So the duopoly nature of the market will always provide BEPL with enough orders to fill its book. Further, any supply disruption and diversion of ABPS to other markets will always increase the scope for Indian manufacturers. 40 to 45% of ABS usage is for auto components and about 40% usage is in appliances industry. Both the end markets are likely to gain momentum in terms of domestic production due to Make in India theme and uptick in trade barriers. Well, underlying dynamics for BEPL's impressive performance. In the third quarter of FY21, the company saw a surge in its sales by almost 58% and gross margins by 57% compared to 22% in Q3 in the corresponding quarter of previous year. EBITDA margin saw a whooping jump of 374% in year-on-year terms and by 174% when compared to the previous quarters in the current fiscal. BEPL's net profit surged by 705% on YOY basis and by 285% on quarter-on-quarter basis. Company's capacity utilization is close to 100% given sharp improvement in demand and lower imports. The company's bottom line was helped by a rise in ABS prices. Internationally by more than 50% due to supply disruption and increase in demand from China, which made suppliers from South Korea divert its product to mainland China. BEPL also gained from a reduction in the cost of raw materials 12% year-on-year. BEPL's plans to augment ABS capacity. While the company is trying to exploit the situation and plans are afoot to start a greenfield facility for 2 lakh ton compounding capacity. The proposed integrated greenfield facility will have better operational efficiency and is expected to replace existing plants at Abu Road at Satnur. BEPL is also looking for a port-based facility which would also lower its logistic cost. The challenges before BEPL. Well, in terms of catalysts to watch out for, sustainability of end market demand and traction in greenfield capex plan remains key factors. But so far, BEPL has not been able to get permission for the appropriate land. As a backup plan, it is also exploring brownfield expansion, which would take 2 years for completion from the time of initiation. Raw material prices are also likely to catch up and hence Q3 operating margins may not repeat, though it may remain elevated for the next few quarters.